Hey everyone, welcome back to Corporate Decoder. Today, Ascent Solar Technologies ASTI just filed an 8K detailing an increase to their at the market offering program, and I am seeing a key piece of information that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. Ascent Solar is essentially selling more stock, and the details reveal how much they might raise and where it is all going. So, Ascent Solar Technologies Inc., the company behind ASTI, has announced an expansion of its at the market or ATM offering program. Think of an ATM program as a way for a company to sell its stock gradually over time directly into the stock market rather than doing a big chunk all at once. This latest filing is a Form 8K, which tells us about major events that shareholders need to know about quickly. In this case, it is about them deciding to offer more shares for sale. The big news here is that they are increasing the total amount they can sell through this program. Originally, back in May 2024, they started with an ATM agreement to sell up to about $4.2 million worth of stock. They've since added to that several times, and now they're adding another $15 million to the pot. This means they have the ability to sell up to a significant amount of new shares in the near future. These new shares will be sold using an existing registration statement that the US Securities and Exchange Commission, or SEC, has already approved. This process is regular and shows they are set up to sell these shares when they want to. Now, here is a crucial point because this is an at-the-market offering. The company doesn't have to sell all of that $15 million worth of stock. They can choose to sell none, some, or all of it depending on market conditions and their needs. This means we don't know exactly how much money they will raise or how many new shares will end up in the market. And what will they do with this money? The filing states the proceeds will be used mostly for general and administrative expenses and other general company needs. This is pretty standard language, but it suggests they are looking to fund their day-to-day operations and general business activities with this cash. Looking back, since they started this ATM program in May 2024, they've already sold about 1.8 million shares and brought in roughly $12.6 million. This shows they have been actively using the program. As of the 26th of June 2026, they have about 9.8 million shares of common stock out there. If they were to sell the full $15 million worth of shares, and assuming a stock price similar to today's, this could significantly increase that number. For example, if the stock was trading around $5, that is about 3 million new shares, bringing the total to over 12 million. This is a dilution event for existing shareholders, meaning their ownership percentage in the company gets smaller with each new share sold. Companies like Ascent Solar, with a smaller market cap and often needing capital for growth or operations, frequently use ATMs. Historically, companies that rely heavily on these types of offerings sometimes face challenges as they continuously dilute existing shareholders. The filing also includes a legal opinion from Carroll Legal LLC. This is a standard part of such filings, confirming that the shares, if issued and sold, will be legally valid. It is there to give investors comfort that the process is on the up and up from a legal standpoint. Regarding the company itself, Ascent Solar Technologies is involved in the solar technology sector. They have a relatively small market cap, around $46 million, and a small number of employees, about 14. This is a very lean operation. They've had recent news about this ATM program increase, and there is ongoing speculation about their potential in the renewable energy space. However, the fact they are continuously raising capital through share sales suggests they are either in a growth phase requiring external funding or facing operational expenses that aren't fully covered by their revenue. Let's look at the context of their stock. The price has been quite volatile, ranging from $1.4 to $9.87 over the past year. Institutional investors like Arosa Capital Management and UBS Group hold small stakes, indicating some level of professional interest but not a large concentrated position. The core story here is that Ascent Solar is enabling itself to potentially raise a significant amount of capital in the near future. The key question for investors is how effectively this capital will be deployed to generate returns, and what the ongoing dilution from these ATM programs will mean for the long-term value of their shares. Companies that are constantly issuing new stock can struggle to see their stock price appreciate because the pie is constantly getting bigger. The risk I am watching is the pace of dilution versus the company's ability to generate sustainable revenue and profits. It is a tightrope walk for companies like Ascent Solar. What I am actually looking for is evidence that this new capital will lead to tangible growth metrics that outpace the dilution. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded, like, comment, subscribe, and join our Discord linked in the description.